I'm William Grantham with IchimokuWeather.com, and we have a Kumo Breakout on Adobe Incorporated. The cloud is also called the Kumo. When price goes above the cloud, it is called a Kumo Breakout. Now, this one is just barely happening with our close of today being just right above the top of the cloud. Looking back in recent price history, we have had several other Kumo breakouts that have been false breakouts. We had one here where we broke up and then came back in. Then we broke out again here, came up, and then came back in. Then a third one here, up and back in. And then a fourth one here, up and back in. And then a fifth one here, up and back in and under. So the question is this going to be a false Kumo breakout or a real Kumo breakout? On the positive side, we do have 8 trading days out of the last 10 that were above average volume. Nothing drastic, but there was 8 above average. So that is a good sign. Now, a negative sign, we do have the blue line that is below the red line. It would be better if we have the blue line above the red line. Also, looking at the lagging green line, it is caught underneath the blue line and old market action. So that could also help stall what is going on. And speaking about what is going on, let's back out just a little bit and see what our chart has here. And if we draw in some lines, we can see that we do have a wedge going on with a line coming down here and a line coming from the bottom here coming up. And so that shows that we are in a wedge shape. So that means that we could be coiling and getting ready to bust up. If we bust up, then the first sign is a Kumo breakout that we are seeing right now. If you are wanting to be cautious, you could wait until there was an open and a close above the cloud. Or you could wait until the blue line was above the red line. Or you could wait until market action got above the red trend line that we've drawn in. Being cautious, we do have a thin cloud in front of us that would be easy for market action to fall through if we continue to consolidate and go back down. If you're interested in getting into Adobe and you wanted to take a chance, you could wait till market action came down closer to the bottom trend line. Let's go back in for a closer look and let's see what would happen if we were to put in a 10% stop. Right now, we are at $484.93, and a 10% stop underneath that is $436.43. If you're using a 1 to 3 risk to reward ratio, then that means that our target price would be 30% above our current price, and that would be at $630.41. Now we can see that now as we pull down our chart. So here is our stop, and here would be our target. Let's pop out and see what this looks like on the weekly. And on the weekly, we can see we do have a little bit of a cloud coming up in March that will be able to give us a little bit of support underneath our current market action. We also have the blue line that would give us a tiny bit of support if we don't fall too much underneath that. And then you can also see how far we need to go to be able to get to that 30% target. Looking back at previous market action on the weekly, we do have what they call a dragon pattern, where we have 1 hump, 2 hump, and then we go up into the dragon's head. So this is a dragon pattern. We do have a lagging green line that is free and clear. So if we can get above this trend line and pull the green line up above these 2 candles here, then that means that the weekly green line would be free and clear as well, and that would also be a bullish signal. Taking a look at a longer term chart, let's see what it looks like on the monthly. We can see that we have come up quite a ways so far, and that's coming all the way up to this 30% line might be a bit of a stretch. Looking at the probabilities of hitting our target, there is a 95% range that is 1 month away at $600. That is fairly close to our target. That's at 27%. And a 95% range on 1 year would be 1,428, which would almost be double what our 30% target is. So going back to the daily, if you were to take this trade, putting a stop at 10% at 436, or where the 10% line is after your entry, you have the cloud that is between your entry and your stop, the red line, the blue line, and the black line, which is our 200-period simple moving average. So the more lines that you have in between your entry and your stop, the safer you could be. So we're going to be watching this Kumo breakout on Adobe Incorporated and see if it can get above the upper trend line. I'm William Grantham with IchimokuWeather.com.